Hello friends, this is Vivek Bajaj, co-founder of Stockage and Elearnmarkets. Today, friends, I have a very special video for you. In this video, I am going to decode algo trading for all of you. I'm sure you must be interested in knowing about it, and if you are interested, you have to watch this video fully because today is going to be a special discussion and I have a special person also who's with me to have that discussion. But before I go to that person, you guys have not clicked on subscribe yet if you are not yet part of Elearnmarkets and you have not clicked the bell icon. So please subscribe to our channel because this is the only channel in the country which is giving a cross diversified understanding of market at almost zero cost. So you have to become part of our family. It's a growing family. Make sure you don't miss this opportunity. Sure. So now coming back to the video. So we are talking about algo trading, a very complicated word, algo trading. And I thought who better than my dear brother Nitesh Khandelwal.
Hi Vivek, how are you?
Very nice, very nice. How are you doing?
Pretty good.
So Nitesh, I've been knowing him for almost 10 years or so.
I think 13 years.
Almost 13 years. Yeah. So for the last 13 years, I've seen him maturing as a trader, as an algo trader, as an owner of India's one of the largest algo trading desks, and also the main guy who's behind the one of the largest, biggest algo training institute in the world, which we know as QuantInsti. So Nitesh is the best person in this country who can tell us everything about algo trading. So friends, you will have to make sure that you complete this video. This video may actually go for a long time, but make sure that if you want to really understand algo trading, this is going to be the best video for you. Alright, so Nitesh, before we go into algo trading, first of all, everyone wants to know about you, your background, what you have done, and why you are what you are today.
Sure. First of all, thank you so much, Vivek, for inviting me on this face-to-face with you. And I must say, I have been following your YouTube channel of Elearnmarkets for a while, and of course, we are closely related in terms of the various ventures that we have been doing. So it's just an absolute delight and pleasure to actually be a part of this and have this interesting conversation with you.
Right.
So thanks for that first. So let's let me give a very brief introduction about me. So financial markets is something that has been very close to me, something that has intrigued me for a very long time. Right when I was doing my BTech from IIT Kanpur as a student, I was trying to figure out what really excites me. I tried my hands. I was in electronics, electrical engineering as it is called in IIT Kanpur, and I was very attached to microelectronics. Then I was more keen towards that. Okay, let's look at the software side of it. Then I was looking at the marketing side because I was just looking for that true passion. What really got that passion inside me? And then suddenly one fine day, I started reading some pink papers. Business Standard, Economic Times, Financial Express, and I ended up reading all of them every day in my library, in my reading room in the hostel. And then I realized that okay, this is what I really want to do. Okay, so since then I have been doing it, and then I specialized into masters from Lucknow for majoring in finance and economics, and then I worked with a bank on the structuring side. And then first thing that I started doing that was trading as a job in one of the prop desks based in Mumbai. And then of course, as destiny would have it, I met some like-minded individuals. So my colleagues from my IIT and from IIM, then we started off with something called iReach.
Right.
And of course, we also connected with you at that very time.
Right.
So it started a formal collaboration since then. So that was the start. that was 2009,
Mhm.
right? So little over 10 years back. And we tried out different things. And eventually today, the baby that we created that time, 2009, which was iReach. So that went on to become one of the leading players in the high frequency trading domain in India. So that's there on the trading side. But we also founded something called QuantInsti, which came in as a side thing when we started in 2010. But over the years, it went on becoming more and more a really amazing solution, which can really help, which we thought could really help a lot of people as the overall ecosystem of trading changed.
Correct.
Right. So the trading, when how it was, so it has been changing since 2000. Then the options, and then the algo trading, which was allowed in 2008 by SEBI in India, and after that, it has been changing with data science and other things coming in. Right. So it is becoming quite an interesting domain, and we thought that QuantInsti can become that vehicle to bring that to help people adapt to that change which is coming in. So we started with that. So I was focusing on the trading business from 2009 to 2016, and then 2016 onwards, I started my focus full time on QuantInsti because I really thought that there can be so much that we can do. Right. And 3.5 years down the line since we did that, I'm really glad that I did. Right. So that's what we are focusing on in QuantInsti today, and I am leading the QuantInsti business for our group now.
Right, fantastic. So Nitesh, your background is some kind of a background with a lot of our users will resonate also. An engineer from a premium engineering institute, and there would be other also from other institute. And then you did your MBA, and then you were trying to figure out what your real passion is. And you got into market, you learned technical analysis, you practice technical analysis. So a lot of people, one of our users are people who have followed technical analysis, who have adapted technical analysis in the last 2-3 years, which you did almost 7 to 8 years ago, or 10 years ago, and then you graduated and thought that the future belongs to algo trading, which is more, I believe, rule-based systematic trading, and that's how we initiated the discussion and we got along together. So your profile is extremely important for my users because these are the guys who are at a threshold of practicing technical analysis, and they somehow believe that it really works. For some it has worked, for some probably it has not worked, but the larger hypothesis is that technical analysis is the right tool to trade in the market. Now some of them would definitely like to graduate from technicals to get into more algo trading. So let me focus this video purely with you on explaining very basic elementary things with respect to algo trading and how my users who are practicing technical, because we create a lot of these face-to-face and learning videos, and technical is a overly exposed topic. A lot of people know about it, but algo is something which people don't know. So this video, let us focus on building the elementary foundation block for people who want to get into algo trading. So my first question is, what is algo trading?
Perfect. So that's a very interesting and very important question that you have asked. And this is also something whenever I'm giving a presentation to any group, be it really the top institutional guys, be it the students, this is where we start from. And as you know that the easiest questions are the most difficult to answer. Okay. So what is algo trading? If I ask someone that what is algo trading, most people will say that okay, it's high frequency HFT. You're doing a lot of sending out a lot of orders and doing all those things. Some people will say that it's all automation. You're automating all the trades, right? You're automating everything. Some people will just say, no, it's just about creating systematic trading systems, creating models, using statistics for that. So it's quite confusing. Right. And to be honest, if you try to look at the definition for algo trading in different jurisdictions, so if I'm looking at the US jurisdiction, the FINRA will have certain definition of it. Right. If I look at the UK or FCA definition of algo trading, they have a different definition. India, SEBI has a different definition. Right. Some people say if you do complete automation, that's algo trading. Right. Some people will say if you are just doing part automation, just creating a model, you're using some algorithm to create a system, create a algo, but even though execution is not automated, that can also be called algorithm, right? India, SEBI defines it very simply. If you are sending out orders in an automated way without any manual intervention, that's algo trading.
Okay.
Okay.
Wow.
So that's what we'll stick with.
Yeah. Okay.
So whatever regulator says for that jurisdiction, that's what the right word is.
Okay.
Right? So that's algo trading. But what are all these other things that we keep on hearing then? So let me give a brief 1 minute thought on that. So first thing is algo trading. Okay, but before that, we need to understand something called systematic trading. What is systematic trading? So systematic trading is where you are saying that I'm not doing a discretionary trading. Okay, I'm not trading at my own discretion, but I'm creating a model. I'm creating a set of rules which will dictate what to buy, when to sell, how much to buy, how much to sell. All those things are being addressed by a system. Okay. That's your systematic trading. It's regardless of whether you are coming to those decisions by looking at the P by A ratio, or you are looking at MACD of technical analysis or any chart and patterns, whatever you're looking at. It's basically if it is driven by a system, right? A system, not necessarily this computer system, but a system of process. It's systematic trading.
So, Nitesh, then why are we limiting our discussion to trading only? Because systematic could be applied for trading, for investing also.
Absolutely.
That eventually it's a rule-driven, data-driven methodology which helps you to take decisions.
Absolutely.
So algo trading, not necessarily. So are we using algo trading in a very loose way that it's trading? Algo actually could lead to investment also.
Of course, there are a lot of firms which do use algorithms for investments. Okay. There are big hedge funds who use algorithms, very complex algorithms also for doing fundamental analysis.
Wow. Okay. Friends, this is a big revelation. Typically we use algo for trading, but it's a very big misconception. Algo can have application for investing also, because data, as much as data is available on trading to play with, if not more, data is actually available in fundamental to play with.
Absolutely. So fundamental, and there are a lot more things which we'll probably, if time permits, we'll definitely love to discuss. But yeah, so you can actually look at systematic trading from the systematic investing point of view, trading point of view, anything for that. So that's your systematic trading. Now, in systematic trading, when you are using computer programs to create certain algorithms which will help you generate the orders or generate the signals which you will trade using automated system or semi-automated systems or manual systems. So we are saying that we are using algorithms. So now we are entering the realm of algorithmic trading. Now, when we are looking at algorithmic trading, when you are using algorithms, we typically, in most cases, but not necessarily, as I said, that you can create algorithms for the technical analysis based systems, right? So using technical analysis, or for fundamentals. So all of that can be done. Right? So you can use algorithms for all of that, but generally, in most cases, people use algorithms for statistical processes. Okay, when you're using mathematics and statistics for the algorithm for creating those systems, that's called quant trading. Okay, what is quant trading? Now, another big confusion, a big question which comes in for a lot of people is that, okay, here is quant trading, but quant trading I'm using statistics. In technical indicators, I'm using indicators, I'm using maths, some bit of maths over there as well, right? So that's quant trading or not quant trading. What is it, right? It can be quant trading. It depends on how you're doing it. Right. If you, so picking up a word which Vivek used initially in the conversation, hypothesis. If you have an hypothesis, no matter how it is coming in, and if you are testing it using set statistical processes, then you are talking about quant trading. Right? So it need not be that, okay, MACD, I'm using MACD, so it cannot be quantitative. It can be. But with the model that you have created for using MACD, how are you testing it out? How are you validating the hypothesis? How you are creating the rules to generate signals, trade those signals? That's what makes it whether it's quant or not. Right? So that's quant trading. And then we have a specific subset of algo trading, which is high frequency trading. So high frequency trading is where you're sending huge number of orders, like a typical, I'll give an example basically, I think that will help. So a typical HFT desk, reasonable sized HFT desk, say in India, would be sending about a few million orders a day. Okay, they will be trading few 10,000 to few 100,000 trades they will be doing a day, right? So they are doing all of that. What it means is that you are sending huge number of orders, you are changing them very, very frequently, you are holding them for a very short period of time, you're churning a lot, all those things resonates with high frequency trading.
Okay.
In high frequency trading, you need very solid infrastructure, very high end technology to make sure that your latency, that's a word for how much time it is taking to do a process, right? So how much time is it taking? So if you need a very high end infrastructure and technology for that. But that's not what all algo trading is about, right? So that's a very specific subset of algorithmic trading, high frequency trading. Okay, and when you are automating everything, that's what we call automated trading. So all HFT strategies have to be automated, but not algo trading or quant trading strategies need to be automated.
Oh, wow. So just to revise this for some of our users, high frequency trading is typically when you trade very, very frequently. So that's why it's called high frequency. And it is a domain of specialized people who are into that high frequency business because they have an expertise of both quant as well as technology.
Yes.
HFT is a very technology intensive because there is something called latency. To connect with the exchange and to get faster response from the exchange, that's what we call latency. So these are specialized people who do high frequency trading, right? And the other form of trading, which I can say it's a low frequency trading, which is more quant oriented, where the whole process may not necessarily be automated, right?
Absolutely.
Nitish, I'll just add my 2 cents into quant,
Please,
which you
yes,
just said.
of
I went
course.
to US and Canada in 2010 just to understand how things operate there when we started our trading desk. And I met a couple of firms there. One of the firm, there was a guy who developed a very interesting quant model. And friends, this is very important for you to hear this. His quant model was based on the color of tie of CNBC TV anchor.
Okay.
Can you beat that? So his model was, it was back tested by him for a period of 2 to 2.5 years, that whenever the color of the tie is X, market used to react in a certain way. Now I was trying to figure out that what is he trying to do? Is he trying to suggest that the TV anchor is suggested something to the audience and market is taking feedback from his suggestion? I don't know. But the point you mentioned that anything could be expressed in the term of quant. It could be price, which is typically technical. It could be fundamental. It could be color of tie. It could be weather. Anything can have an impact.
Yes.
But your hypothesis has to be well defined.
Hypothesis, that's defining the hypothesis. But now it will become a quant-oriented strategy if you are able to validate that hypothesis properly.
Right.
I'll give another example. I had this hypothesis that in 2010, 2009, 2010, there was this specific moves in Euro USD which used to happen, which got almost same as what Nifty used to be. So the last 4 digits of a Euro USD will be similar to what the levels of Nifty were.
Okay.
It's totally spurious, it's totally random, but it was what it was at that time. But if I were to, and I did, check to the hypothesis to validate it, it's not going to work, right? So you will not be able to prove anything using proper validations. And of course, it broke in a few months, so that's there. But it was fun.
Right, absolutely. So, I mean, maybe our conversation is suggesting to people that, oh my God, it's very hi-fi. We will not be able to do these kind of things. So I want to actually come down and I want to say that if suppose a normal person with a bit of academic background, I understand that people with zero academic background, academic interest, for them to get into algo would be slightly complicated. But someone with an average academic background, can that person start making an attempt in learning quant or algo trading?
Yes, I think we have been interacting with a wide variety of people over the last many years, now almost 10 years in QuantInsti. And I think we have had fair share of people who come from very strong academic background, as in programming or statistical background, as well as people who are coming from non-programming background, non-statistical background. Is it easy to pick programming languages or statistics for a person who is coming from non-statistical, non-programming background? No, it's not easy. But can it be done? A lot of people have done it, right? So it's possible to. A huge amount of effort would be required for sure. But if you want to, you would be able to. So that's there. So now the thing is that, what it needs is the bent of mind which tries to think analytically, right? if you consider yourself a trader who likes to hear about the levels from someone and try to follow that and trade that, then the analytical bent is slightly out of shape in that case, is what my personal opinion is.
Right.
But if you're someone who is hearing that, but then thinking about it, why is it happening, right? What is the reason behind it? Then I'm saying that, okay, you are slightly analytical. Then you have that bent of mind which can help you in understanding how algorithms work. So algorithm is not a program. Algorithm is a set of rules, right? It can be mental also, so that's fine. But then when you're putting that into a computer, then we are talking about a programming you will have to use a programming language to do that, right? So you will need to learn about syntax. It's basically learning about how you learn English, or if I'm trying to learn, say, Spanish or Gujarati or any language, right? So I'll have to learn about how the alphabets are, how the combination works, right? So that's how it is for the programming part also, right? So you'll have to put in effort to understand that syntax, understand those compositions. Once you understand that, you would be able to create and talk to a computer just like any programmer will be able to. Right. So that's one part of it, but it's not just about programs, but also about stats part, how to use, understand the basic statistics, and then how to use that for, first thing is hypothesis creation, trading ideation as a trading strategy ideation. Second step is, once I have thought of a hypothesis, how do I validate it, right? So how am I validating it? Third step would be how to create a tradable model around that, right? And then defining the rules for exits, entries and exits around that. And then I say that optimizing it, right? And then benchmarking. Now, here is a key thing. Most of the people, when they start the quant trading aspect, when we talk about optimizing, they end up curve fitting. Okay, that's not what we should be doing, right? So that's just creating a very rosy picture of the past, which is not going to work tomorrow. Okay, so you've got to backtest it in a more scientific way. You have to use the things called in the sample, out of sample data. You have to divide the data and do all sort of slight statistics that you have to use to make it actually a bit more real, right, rather than surreal. So that's important. So once you do that, then you go about the implementation part, which is where the vast part of programming will come into the play as well. Okay, so those are the things that you'll have to learn about. Can it be done by people from non-programming, non-statistical background? Yes, it can be done. Will it need an effort? Yes, it will need a decent effort.
Well, money making always needs a lot of effort. Absolutely. It doesn't come easy for sure.
Yes.
No, especially when in this, no freelancers, especially in the world where 60 to 70% of the turnover globally is happening because of algos.
Yes.
And robots have literally taken over our role, so money making would need an effort.
Even in India, you have nearly 50% of the volumes which is happening through algorithms in the derivatives market.
Yeah.
Right. So, which is the main market for us. So that is already happening, and there is a reasonable number of people who are using systematic or system-oriented tools for trading at an individual retail level as well. There is a very decent number of people who are already doing that. When I say decent, it's a decent number. Right? So
Nitesh, people are with us who have probably joined market in the last 2-3 years. Maybe because of huge evolution of discount brokers all around. Somehow people have realized that this is a market to be in. So a lot of our users actually belong to that category. And some of them are actually guys with some technology background.
Sure.
Maybe part of some IT company or left the job in IT company and doing it. Large part of the audience is someone who has learned technicals.
Okay.
Yeah, in last 2 years, either they have learned it from us or through free channels, through paid courses, workshops. Lot of influx of quality programs with respect to technical analysis has come in our country. Now, I want you to define a path for those people. Like this video is step 0.
Okay.
That they have now begun the
launching
process.
pad.
This is a launching pad where they have started now thinking about, yeah, Algo hai kya? Mujhe karna kya hai Algo mein? They have started thinking. Now, tell me 5 steps. This is the step 0. Tell me step 1. Someone who knows technical, what should he do? So he or she should do. Step 2, step 3, step 4, step 5. So that after a period of say 1 year, 1.5 years, 2 years, they may actually have that courage to actually go and launch themselves in algo trading.
Sure thing. So first thing I think it would depend on is that what is the objective? Why am I doing it? What I am doing? So if my objective is, so say one thing is that, okay, I've started my career in financial markets the last few years, and it's been going great. I'm using technicals for this. Now, for them, most likely the idea of creating or using algorithms would be to further expand that, right? To scale it up, what they're already doing. There would be others who would be saying that, okay, I'm doing okay, but the performance is a bit up and then down, and then it's a bit unstable.
That's last part.
Right?
That's the maximum people.
Yeah. So for that it would be more of how to use algorithms to improve the performance, make it more consistent. So in that case, the focus would be more of learning the new skills, new techniques, new tools that you can use to ensure that is happening, right? And then the people who are not able to pick it up, right? So who are maybe say losing money, trying their best but not making it, then the idea would be that, okay, then it's time to revisit the whole thing, right? So change the approach, look at the new approach, what may or may not work. Now, regardless, now the first step is that, so where you identify yourself. Once that is done, then you know that what my objective is. Once the objective is defined, then we say that in the step one, I believe skills is the most important, but if you got the skills, you will be able to move ahead. If not, then we are stuck over there itself.
Right.
So skills is something that has to be picked. For algo trading, what you essentially need, algo and quant trading, the things that you will need is, first thing is statistics and econometrics, right? So let's say stats and maths, right? So stats and maths, basic knowledge to a reasonable amount of decent advanced knowledge too. Then the programming or financial computing. In that, Python is what the world is eating, drinking, and breathing these days. That's the most popular programming language. In fact, I was very glad to know that even CBSE has already inducted Python in their curriculum.
Wow.
for this school education, which is like really amazing.
Finally, someone is hearing me.
Yes. So Python is there, but of course there are all other languages. But Python is something that is expanding really fast. And then the financial markets understanding. So you need to understand what financial markets are, what different type of instruments are, what derivatives are, all of those things. So that's the skills that you need to learn. Next step is that you're learning about the tools which you can use to showcase or deploy these skills, right? Whether it be for creating the models, generating the signals, optimizing your models, or executing your models, right? So those would be your next step, which you will be doing. Once that is done, then you will be going for the live trading. So once back testing is done, you've done your paper trading, you have absolutely sure about that whatever I've done, it does make sense. There is a robust strategy that I already have in place. Now the idea is that, okay, let's put my real money into it. A lot of people say that trading is like swimming. Once you jump in the water, if you don't jump in the water, you don't learn. I don't totally agree with that. So I believe that if you are going to risk your own capital, or anyone's capital, so you got to ensure that you already have done it in the demo strategies, in the demo environment, in the simulators, whichever way, in paper trading, whichever way you want to do it. But you have to make sure that you have done that. You have a proper, very strong hypothesis and very strong reason for actually taking it to the live to the market, right? It's not about take it to the live and then we'll modify it and change it now. Market will not give you that many chances. Market is a tough master. It's a ring master and it's a very tough one. Okay, so you got to be really prepared when you do that. And once you have done, then you take it to the broker system, through whether it's a discount broker, or it's a old conventional broker, whichever way it is. So you take that with your broker and live with the broker, and then you do the next step is continuously research and optimizing and using the feedback output that will be coming in, that okay, these kind of strategies, these are generating these type of returns, these type of strategies are losing in these type of markets, matching it with what kind of strategies are working in what kind of market, all of that. So the research and the feedback loop that you'll be creating, and then revisiting the whole process. It goes back to the learning part, right? So learning and then creating, optimizing, backtesting, research, implement, and again the loop.
Wow, that's pretty interesting. The steps are quite well defined. But Nitesh, I want to see a algo code.
Oh, sure.
Can you show me some code? I've never seen an algo code. How does it
Yes,
look?
I have already kept it open. So over here, this is a simple Python code. Okay, I've kept it very basic strategy, very basic thing, which is what it is doing is that you're just writing a Python code, small Python code for buy and hold strategy.
Okay.
So what it effectively is doing is that I'll buy at every defined period of time. I'll be buying a list of 9 stocks. Okay, and I'll be rebalancing after a certain period of time. Okay, so if some trades or some stocks are going outperforming and then some stocks are underperforming, so some will have at the end of, say, if the quarter is the 1 quarter, say for example, if the period, in that case I will rebalance to this code. So in this we have defined the symbol. Symbol is essentially your all these DBs Lab or Sun Pharma, Maruti, or all the stock and everything, and then the order target percentage. So how much percentage of the cash that I'm holding I want to put that into the order, right? And then I have this schedule function. Okay, schedule function is it's scheduling that when to do what to do. Okay, and then the date rules. So what date and the time rules. Date and time, basically I'll be defining what date and time they are in. That's about it. And then I'm just creating this portfolio, right? So this is syntax, as I was saying that whenever you're learning a language, there's a syntax that you have, and you're defining each and every symbol over here, Asian Paints, TCS, and then we're saying that schedule function rebalance. So at the month day of set 0, so that is when the month is starting, and on that date, and when the market close is essentially 2 hours 30 minutes. Okay, market close. So at that time, I will be running this rebalance. In this rebalance, what it is doing is that 50% of the portfolio to belong in each security. So I'm creating a long portfolio over here, and then I'm sending it out order target percentage for every security, every symbol over here, and which is 1 by 10. So 10% of my portfolio in each. That's about it. That's what I have done over here. And this is what it is. So this is a buy and hold strategy. So this period that I have taken is bull phase since 2011, start of 2011 till end of 2019, start of 2020 basically. So obviously the market have been going up, but buy and hold would work in that phase, right? So that's why you have this benchmark, which is your Nifty 50, and this is your buy and hold portfolio, which would have generated huge amount of returns over the time. Now, this tells you that, okay, this is my returns, but then alpha, beta, Sharpe, drawdown. So all these are performance metrics which you use to evaluate how a strategy is doing. So that's there. You can do a lot more things on different platforms, but yeah, so that's there.
So this looks like for people who have a bit of understanding of programming.
Yeah.
Can actually write this whole code in a very simple way.
Yes.
But someone who has no understanding of programming, there isn't a easier UI where all these things are well defined and it's easier for that person to just drag and drop or just see that it works.
Yes.
It is working exactly the way that person is visualizing.
Mm-hmm.
So I believe there would be certain tools which will help people.
So we are working on that actually. We are trying to create that something on those lines as well. Now the idea is simple, that we also don't want to restrict the users in terms of what all things you can do. I don't want it to be a platform. So this is our own platform, of course, but it's called Blue Shift, and we don't want it to be a case where people are coming in and they are only allowed to create certain type of strategies. Say just technical indicator based strategies or just candle based strategies, that okay, these 3 candles, if this happens then you will buy or sell.
Do you think those strategies work in market?
I don't know. So the research says that most of the retail investors end up losing money, right? So, and I do know that these are very, very popular strategies. So if I do some correlation, probably it's not working, right? Probably.
Right.
But I don't have any direct research to show that. But I do know and I do believe that what we have is strategy building or alpha generation, or basically generating returns out of strategies, is something which is very, very tedious business. Okay, it's not easy thing to do. So you will need full amount of leeway, full amount of freedom to try different things. If you're not able to do that, if you're restricted, it's going to really limit your capability to create those strategies, to create those winning strategies. So that's the thought, and that's why our general advice is that if you put your time into learning the techniques which will help you explore unrestrictively, then you got to learn programming, and that will really help you.
So friends, what I'm getting a sense from this interaction is that if you have learned technical, the most logical evolution for you is to start thinking about algo. And the most natural thing from technical to algo is to adopt those standard strategies which is there as part of technical. For example, moving average crossover or MACD RSI combination.
Good to get a good
it's a good
start
it is a good thing to start with, and there are tools like AMI Broker and all those ready to available which would help a person to graduate. And there are certain brokers also who are trying to launch these tools. So it will give you a good ideation. Okay. Parallelly, one should actually go through these structured modules, which is like computational finance, statistics, and everything in a very structured way, that over a period of say 9 months, 10 months, when parallelly you are seeing that side of the market and you are learning also, you actually become graduate enough to start coding your own strategies here, and real alpha generation will happen once you actually go to this level of market participation, correct?
Yes, yeah, absolutely.
So I think QI as an institute, we have been working on this for quite a long period of time now, and there are enough free materials available.
Of course, we believe that we got to provide the tools and the education as much as free as possible. So, so the content is something which should be available, the basic content especially, and that's why we have huge number of resources and materials which is available online.
So can you show where exactly are the free resources?
So if you look at say this QuantInsti website, if you go to the blog, there are I think nearly 400-500 blogs, very well made blogs and very popular, right? So these blogs are consumed by nearly I think 1 million users every year, right? So across the globe, and I'm glad to say that this is helping people not just from particular regions, but this has a viewership in like more than I think more countries than what UN has, right? so that's there, and you can also figure out that okay, what you're looking for: automated trading, Excel, or forex and crypto, machine learning, or momentum, or your options trading, portfolio risk management, anything for that matter. Or if you're looking for career growth, then if you want to learn more about industry, jobs, and skills, so all of that can be possible. Alternatively, you can also look at many of the free courses which are available on Contra. So if you go to the all courses over here, so
it's contra.quantinsti.com. I just want to highlight the link.
Yes. So these are all the different courses. If I just check out the free courses over here, so I think these are all the free courses that I can see, right? So some by QuantInsti, some with some.
So there are free courses like Introduction to Data Science, Momentum Trading in Forex, Machine Learning for trading, Option Trading Strategies in Python. This is NSC Academy co-authored course. Python for Trading Basics, Quant Interview Question Preparation. Guys, free, so much available.
And these are the key part about Contra is that there are a lot of portals which do that, and we don't want to add to things which are already great, right? So what we have, the value that we have brought to the table is that these courses are hands-on. When I say hands-on, it's not just videos, MCQs, but in addition, because it's talking about a domain which is quant and algo trading, so it is also talking about Python. Everything has Python in it, and in Python it's hands-on. So machine will be giving you constantly the feedback. It will be telling you what to code, what not to code, 1 or 2 lines of code in every unit, and it will give you feedback what you're doing right, what you're doing wrong instantly, right? And which you can use and move forward, and unit by unit you'll end up creating the whole working trading strategy, right? So that's the idea about almost all the courses on Contra. And of course then you have learning tracks where you can see that whether you how to get started with quant trading, or find alphas, or machine learning for financial markets, so trading using specific instruments, all of those things are possible to do. So they are more of learning tracks where you will learn that okay, a list of things. Or this is completely self-paced. If you are looking for more of The ideas where it would be more of instructor-led training, then you got to go to the QuantInsti directly, which is the executive program in algorithmic trading.
Right.
So which is 6-month long instructor-led training online. Anyone can do from anywhere in any batch. Typically, we have people from 20 to 40 countries who are participating in that batch. Weekends only, targeted towards working professionals. So that works out well for people who are looking for instructor-led training. So someone is teaching you in live. Right?
So how many people have taken APAC till date?
I think that was a few thousand people So we have a registered user base from about 180 countries. So that's there, and we get participation from all over. So
wow. So friends, I mean, the intent was not to sell our programs. The intent was to give you a proper roadmap. If you really are serious about algo trading, this is a roadmap which you have to follow. We have already defined the steps. Nitesh already defined the steps. There is enough free material available. There is a practice tool available.
This Blue Shift, by the way. Once you learn about these things, you can come and implement it over here. It's freely available.
It is also free.
Right.
So much of free
minute
content.
level data for Indian markets, US markets. Yeah.
Wow. So there is, I mean, very less reasons to give excuse now that we don't know. So you have been given enough free resources to actually upgrade yourself. So friends, I hope you liked this interaction. I hope now you know what algo trading is all about. It is not just about moving average crossover, right?
But it's an excellent example to start with.
Yeah, it's an excellent example to start with because that gives you enough dope to get into that field. But really, if you want to become a quality algo trader and generate the kind of return which algo trading firms generate, you will have to graduate, and there is a process through which a graduation is possible. So see if you want to adapt this process and become part of this lovely setup which Nitesh and team has created for all of us. Nitesh, thank you so much for giving your time. We need to close this video now.
Thank you so much, Vivek. It was lovely talking to you in this formal setup. So it was absolutely awesome. And thanks to you, and thanks to all of you who have been enablers in whatever we have been doing. So thanks a lot, everyone.
Thank you, Nitesh. So friends, I hope you liked the video. We are going to record more videos with Nitesh and get deeper into algo trading. This was more of making you a 10,000 square feet height understanding of how algo trading works. Use these free tools. I don't think so anyone in India is doing the kind of work these people are doing. It's truly a global product which they have created. So you become part of that. At least try the free things, graduate, and then if you feel like yes, you are ready for the paid premium things, then you obviously have a full right to buy if you want to. If you have not subscribed to our channel, you know what to do, and if you want to know when the new video is there, you know what to do. And in case you have any point to be shared with us, there is a comment. Please comment. We'll share the link of QuantInsti, Contra, Blue Shift, everything here. Go to that website. We will request Nitesh that there will be people who will be writing comments. So if you can reply to their comments, they will feel that someone is answering their questions. So thank you friends for your attention time. Hope to see you again in next video. You remember Friday 5 p.m. hashtag is our tagline. So every Friday 5 p.m. you should expect a video from us.
Awesome.
Thank you.
Thank you.